I will say there's an interesting, nuanced reaction in the futures in the Fed funds futures market. They've actually raised the probability of a December hike by a couple percentage points and lowered it somewhat for June, and then October was the next sort of month in play for that second hike. So I think that's right. I think the market had already done this kind of work beforehand. It had brought down, it got rid of what was a March hike baked in and what was a June hike baked in. Now it baked in a June hike and maybe one in October.
So the whole point here is that, remember, the comments on October 3rd, a long way from neutral, suggest you need several rate hikes to get to that level. Today, the Fed chair says just below, obviously suggests you don't need as many to get to neutral. And that's, Steve, the reason why the stock market is reacting that way.
Yeah,
it's it's undeniable, isn't it?
What's undeniable is that he clarified the language. I just don't. I think it's a leap too far.
By clarifying it, didn't he also suggest fewer rate hikes are in the offing? How could it not? You don't need. You're just below, clearly, rather than a long way. So those are two far different things.
Right. So if he came out, forget the prior speech. If he came out with this speech, what would the market have done? Probably not a lot, right?
If he said still we're a long way from neutral, you'd be looking at the exact opposite reaction in the stock market and probably much worse.
So what he has done is he has elicited a massive short squeeze. He's lowered the dollar, which was a concern, and he's taken the 10-year. Don't look at the 10-year. The 10-year is unchanged. Look at the 2-year. The 2-year is what's important. The yield on the 2-year is moving lower. He gets the markets.
Look at the 10, though. The 10 is almost round trip. Guys, if you could go hit the back button on that chart you just had up there, the 2 is in the process of round tripping, but the 10 is almost unchanged.
And shouldn't it be that way, though, right?
That's
the
way it should be.
expectation is that December is going to happen. You'd expect rates to move up, would you not? And then we'll see. And I think without saying it today, he said it.
But what he could say when you say you're a long way from neutral, right? What it could mean is that there's just no inflation, jobs are, growth is there and it's stable, and the economy is moving along, not at 7%, but at a good rate. So I'm a long way from having to raise to neutral. You just don't know what the intention of the comments
Let's spend the last 90 seconds that we have really discussing whether the market is primed in any way for an end-of-year run after all the upset that we've witnessed. Pete?
I would say we're in a short-term temporary run, and then I think a few days at least, maybe. But then I think there's a reality that steps in, Scott, and the reality continues to be trade for me. I mean, we talk about these two elements. That is the big element, right? I mean, so that temporary, it's why I've been sitting here listening to Powell and selling, trimming as much as I possibly can. If it's moving, I'm trimming it up because I don't know how sustained this run is going to be.
John?
I think you're going to see exactly what Pete's citing, trade be the focus. And clearly, some people were putting on very large hedges. That's what Pete was citing as well, in puts in the S&P 500, 2 weeks out. They want to cover the G20, and they want to have protection to lock in some of the gains they've got right now, Scott.
Yeah, that is the next big moment. The President Trump meeting with President Xi at the G20, and that is the next big development, Steve, that the market's going to want some sort of development to come out of.
So like Pete, I put on some trades, as we started to hear the speech, and now I'm going to take them off. It's not a market where you stay in trades.
Yeah. Joe, quick?
Financials, JP Morgan, get long.